Jeff Jensen. I'm an accountant here at Mazuma. Our topic today is financial fitness goals for 2021. I'd like to remind you that these webinars are recorded and posted to our YouTube channel. So if you like this kind of content, then go there, like the video, and subscribe to the channel. It helps us a lot and lets us know what kind of content, what kind of topics you all want to learn about next. If you need more information, once this webinar is over, then you can head to our website at www.mazumausa.com for more details. Mazuma clients can also go to their dashboard and get in contact with their assigned tax pro if they have additional questions. Following the webinar, we will have a short Q&A. So if you have any questions that are related to our topic today, then click on the Q&A box below and type in your question. I will be more than happy to answer them in more detail when it comes to that time. All right, so let's get started on the financial fitness goals for 2021. So at the start of each year, many people use this time to reflect and make changes in their lives. It is a time to make resolutions or to set goals. It should be the same for your business. No matter where you are in your business life cycle, whether you have been running your business for 5 years or just started last week, this is a good practice to have, to set goals and to see what you want to get out of your business. For today's deep dive, I want to go over some common areas that goal setting would be important. To start with, get organized and take ownership in your bookkeeping. Just because you have Mazuma accounting or keeping track of your bookkeeping for you doesn't mean that you don't need to know where those numbers are coming from. So make sure you capture all of your income and expenses for your business. The easiest way to do this is to have a separate checking account for your business. And make sure that all of your income and expenses are going through that business checking account. Now, I know that this might not be feasible when you're first starting out and you haven't even set up your LLC yet, or whatever business entity you are, because you're going to need some paperwork to file with the bank that you'll need that entity set up before you can set up the business checking account. So some things I'll get to that later for those transactions that you have paid for personally, but have not recorded through the business checking account. But I want to make sure that you're trying to run everything that you can through that business checking account. Right, so you know your business better than anybody, and you know what type of business expenses you have. Just remember that as long as those expenses are ordinary and necessary for your business, they are a business deduction and they're counted as a deduction by the IRS. Some other things to watch for, as I had mentioned earlier, are expenses paid for personally prior to having the business checking account set up. So what you'll want to do there is either have the business reimburse you for those expenses, or just let your bookkeeper know what those expenses are, and we can get those added to your accounting records. The other thing is home office. Make sure that the space that you have, the dedicated space that you have in your home, that you're keeping track of those expenses that go along with that home office, maybe some repairs and maintenance that go along with it, that you're keeping track of the square footage of that home office so that we can deduct the utilities. Another thing is your auto miles. As you are traveling around, maybe taking a run to the office supply store or going to buy product that you're going to sell, make sure you're keeping track of those business miles because those are a deduction for you. Um, you'll need to keep an auto log so that you can record those miles. The other thing is travel. As long as the travel it has a business purpose for it, then that travel becomes a deduction. The airfare, the hotel, the meals, all of that, the car rental, all of that will be a deduction for the business. So after you've captured all the income and all the expenses for the business, then make sure that you understand what those numbers are telling you. Are you making money or are you losing money? Because that's going to affect your tax situation. And so the next goal would be to understand what this means for you and your taxes. And that depends on how your business is set up. There are several types of business entities that your business can be. It can be just a sole proprietorship, or it can be a single member LLC, a multi-member LLC, an S corporation, or a C corporation. How they are taxed depends on which type of entity you have chosen. Now, if it's a sole proprietorship or a single member LLC, these two types are just going to be included on your individual tax return as an additional schedule. If it's set up as a multi-member LLC, this is going to be considered a partnership and will have to file an information tax return, which means that the partnership will not have to pay any taxes itself. It's more of an information return to let the IRS know this business made this much money. Now watch and make sure that these individuals are reporting it on their individual tax return. An S corporation, it'll file an 1120S tax return or a corporation tax return, but it also, like the multi-member LLC, is a pass-through type tax return. So again, it's just letting the government know that the business made this much money on their individual tax returns, and make sure these owners are reporting on their individual tax return. A C corporation will file a corporate tax return, but it pays its own taxes like it's its own individual. So what that means to you, so if your business is set up as a sole proprietorship or a single member LLC, a multi-member LLC, or an S corporation, all that income passes through and will be included on your 1040 tax return. And all that income, if you are making net income, then that means that that income, no taxes have been paid on that income. So if you're making money in your business, start setting aside a little bit of money away for taxes. It's easier to come up with a little bit of money each month versus having to come up with a large amount at the end of the year. Another thing to be aware of is a sole proprietorship, a single member LLC, and a multi-member LLC are all going to be subject to self-employment tax. Now, self-employment tax is Social Security and Medicare taxes. When you work for somebody and the employer pays you a wage, out of your wage, they're withholding Social Security and Medicare taxes. And that your portion of that adds up to 7.65%. The employer also has to match that same 7.65%. So they're paying into the government a total of 15.3%. When you're self-employed, you're paying both portions, the employer portion as well as the employee portion on your net income. And so if you are a sole proprietorship, a single member LLC, or a multi-member LLC, your net income is going to be subject to that 15.3%. An S corporation is a little bit different in the fact that it is not subject to self-employment tax. It still passes through to the owners, but that income is not subject to self-employment tax. The reason for that is an S corporation, the owners are required to take a reasonable wage. They don't really come out and say what that reasonable wage is, but they're just watching on your tax return to make sure that they see that there is a spot that owner or officer compensation is recorded on that tax return. So you'll want to make sure, if you're an S corporation, make sure that you are taking a portion of the income out as a reasonable wage. Okay, so that is the end of the topic portion for our webinar today. Let's get started with the Q&A. I'd like to remind you that you can submit your questions in the Q&A window below. We would like the questions to pertain to the topic of the webinar, but we will answer enough questions. We'll start answering more off-topic questions as well. So let's get into the questions. Okay, this question comes from Marcelo. Hello, my new LLC still has its EIN in process, but it was registered at the Secretary of State dated December 31st, 2020. Does this mean I will have to do any tax filings for 2020 this year, or only 2021 and 2022? Good question, Marcelo. Since you registered your business in December 31st, 2020, you can record and file that tax return or the business's taxes in 2020. Chances are there's not any income, but just expenses for that year, which is fine. Going back to the topic that we talked about, if it's one of the entities that the income passes on to you personally, that means that that loss will just reduce some of your other income that you have. Okay.
So it's not required, but can be done?
Yes. It should be done in that year because you're a cash basis filer. So if you have expenses, that's when it should be filed. Perfect. Okay, so our next question, it says, I have a couple questions for our newly formed LLC, 2 owners. So it's a multi-member LLC, and it is a pass-through entity. Can you provide some light on it? Is it okay to do stock trading using our LLC? It kind of depends. So they're asking about doing stock trading in your LLC. So, and then the follow-up question is that how are the income and loss deductions, how will that work in the LLC? It kind of depends on if that's the main source of your business, or are you just doing some side investing for the LLC? If you are just investing some money, but that's not the main source of your LLC that you're have doing other income per se, like running a janitorial business or whatever, if that's the main source of the janitorial business is your main source, and this is just kind of side business, then the losses will be treated pretty much the same as if you were buying and selling stock as an individual. It'll be subject to the ordinary capital gains and losses. Now, if it's like day trading and that's your main source of business, then you can deduct more of the losses in that scenario. If this is probably more complicated from the webinar standpoint, so if you have further questions with this, follow up with a tax advisor. The second question to that, I have a bonus coming from my full-time job. I want to save tax on it. Is it treated as an expense if I buy some online websites, stocks, crypto? That is not, because if when you buy stocks or crypto, it's handled the same. That's your basis in that asset that you're purchasing. And then that offsets when you sell it. So say for instance, you buy it for $1,000. You don't write off that $1,000 at first, but when you sell it, say you sell it for $2,000, now you're recognizing the basis of that stock or crypto, and you're only recognizing the gain on the 1,000. Any other better ways to save tax on my full-time job using the LLC? Probably the best thing to do, but it's a little bit after the fact, if there were expenses that you would have needed that were coming up to buy those, say for instance, you needed a piece of equipment for your LLC, and you didn't need that till this year, till 2021, you could have purchased that in 2020 and had the deduction in 2020, and that would have helped save you on taxes in 2020. The problem is with that is now we're past that 2020. You can't really go back and make that purchase in the past. One caveat to that is I don't want to encourage you just to go out and spend $1 to save 30 cents in taxes. But if you're going to spend that dollar anyway, then it's great, because then you'd get the tax advantage of that or the tax savings. But if you're not going to use it, it doesn't make any sense to spend $1 to save 30 cents in taxes. Okay, so our next question, what's a good percentage to set aside for taxes in California single member LLC? Probably, now this is kind of a loaded question because I don't know your overall tax situation and how much money you are making, but probably it would be safe to at least set aside about 40%. And if that's not enough, then at least you would have some set aside to help your tax situation. Okay, our next question. What am I actually filing on my personal 1040 as a dual partner LLC? So I think you're meaning that as a dual partner, you mean the multi-member LLC. That's a partnership tax return that will be filed itself on a 1065 tax return. And your portion of that partnership tax return will be reported to you on what's called a Schedule K1. So that's what's generated from the partnership tax return. And what will be filed on your individual tax return is on Schedule E, page 2. That's where it lists out all K1 income. Okay, the next question. What if you started your business in December but haven't made any money? Um, that's kind of the same as the question we had earlier. If you had expenses but no income, then you can report those expenses in 2020, and that income will just reduce any other income that you might have, whether that's from W-2s or from a spouse. It will just reduce that income. What if the business does not make money in the first year or loses money? Same scenario. It will just offset any other income that has come in from that individual and just lower their taxable situation. If my husband owns the house and I use a room of the house as my home office, can I claim that expense? Do I have to ask my husband to create a rental agreement for the house for the deduction to be valid? No, you do not need to have a rental agreement. You just need to report that home office into the business. For a single member LLC, do the self-employment taxes apply to all income revenue or the net income? It's just on the net income of your businesses. So after all of your expenses. That's why I was stressing beforehand to make sure that you're capturing all the income and all the expenses and deductions, because it's that net income that's what's going to be subject to the self-employment tax. What is the simplest way to file taxes for a multi-member LLC? Pass through all earnings to the members, or to file pay taxes as an LLC. So that multi-member LLC will have to file its own tax return, like I mentioned, a 1065 tax return, and that LLC will not pay taxes, but it will just report to the IRS what that business did, how much money it made, or how much income came in, what are the expenses for that business, and the net income for the business. And now the individuals need to report their portion on their individual tax return. Do I need an accountant to file the LLC taxes, or can I use TurboTax? I have not used TurboTax, and I don't know what its possibilities are regarding a partnership tax return. So I can't say to its reliability, but I would suggest getting a tax professional. Are owners' distributions taxed for an S corporation? Great question. So how it works is you're not taxed on the actual distribution that comes out of an S corporation. You are taxed on the net income from the business. For instance, if the business, say it had gross revenue of $100,000 with $30,000 of expenses, so it has net income of $70,000. But as owners, you want to keep a cushion in the S corporation, and so you leave, say, $20,000 in the S corporation and only take out $50,000. You are still taxed on the full 70, even though you only took out $50,000 from the S corporation. So just be aware of that. A vendor asked me for 10 to 30% value in products or full invoice when it comes products. What do they mean by this? She told me I would need to know to avoid paying customs taxes. I'm not sure. I think that might be a custom related issue of importing goods, probably. Next question. Is 50% of S Corp income a reasonable wage, with other 50% not taxed with self employment tax? Another good question. So the IRS doesn't come right down and say as a percent of net income. What it comes down to is looking at the type of work that you are doing, whether it's managing the office or doing some invoicing for a client or running errands for the store. what type of what type of salary would you have to pay somebody to kind of do that type of work? Obviously, we want to keep that salary low enough so that you're still getting the tax savings and not paying the self-employment tax on that money, but large enough that the IRS couldn't come back and say that's not a reasonable wage. And so it's without knowing your specific circumstances, um, that could be the correct amount or a reasonable wage, but it just kind of depends on your business and what type of work you are doing. If you have an LLC, do you do you have to pay yourself? Um, if you are a single member LLC, you should not actually pay yourself as a wage. I'm assuming that's what you're meaning by pay yourself, as running it through payroll and taking taxes out of that. Um, Only if you are taxed as an S corporation should you be running it as payroll, running your wage through payroll and taking taxes out. If you're a single member LLC or a multi-member LLC, you should actually just be paying yourself by writing yourself a check from the business checking account to your personal checking account. And the reason for that is all that money is going to be subject to self-employment tax anyway. So you shouldn't pay yourself as an employee. Can we talk about filing 2553 election for 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 LLC formed in 2020? So if it depends on when that LLC was filed in 2020, you can do a late election and file the 2553 so that you can have that LLC taxed as an S corporation. That's what form, for those that don't know, the form 2553 makes the election to be taxed like an S corporation. And so yes, you can make the election to be taxed like an S corporation. How far back can you collect startup costs before you can write that off as an expense? I would say all the way back to January of 2020, you could do that because you'd be running your business, um, and capturing those expenses. Um, what are a multi-member LLC, non-member? No, oh, none of the members, only two partners, are from the United States. How can we make the declaration? Oh, so it's a multi-member LLC, yet none of the partners are from the United States. You would need to, each partner needs to have an EIN or an ITIN from the United States so that they can report those taxes here in the United States. Um, I have a single member LLC taxed as an S corp. I have payroll set up, but will have some extra funds available each month. Okay. Can I take an owner distribution each month? How and when do I need to pay the federal income taxes on those distributions? Are there tax deadlines for that? Okay, so great question. So that extra money that you have set up or that's coming in besides your payroll, yes, you can take that out as an owner distribution and you can do that each month or each week, however often you want to do that. Now, paying the taxes, that's going to go along with your individual tax return. And so you can either make estimated tax payments on a quarterly basis, or you can set that aside and keep it in a savings account. Now, I don't know your individual tax situation, so I can't tell you if estimated taxes are required or not, but it's a good idea to at least set that money aside in a savings account so you have a portion of that owner's distribution, the taxes for that. Okay. What form do we file for a dual partner LLC? And then how do we coordinate this with our individual tax return? So a dual partner or a multi-member LLC will be filed on the 1065 tax return, a partnership tax return. Once that's filed, that tax return will generate a Schedule K1, and you'll need to give each partner, each individual, their K1 so that they can report that income or loss from the partnership on their individual tax return. If we have a job who takes care of our insurance while owning the LLC, should we still set aside, if it's going to be subject to that self-employment tax, yes, you should set aside that 15, because that's not set aside for medical, that's set aside for Medicare and Social Security taxes. It's self-employment tax. And so you want to set aside that money so that when you file your tax return, you have at least that portion so that you can pay that additional taxes. Because that self-employment tax is in addition to your income taxes that you normally pay. I have my own S Corp. Am I free to either pay estimated taxes through my Social Security number or have taxes withheld by the S Corp? Yes, you can do either. And one of the advantages of paying extra taxes through your S Corporation would be you can do that at the end of the year and it's still, so let me back up. Wages are treated as if you paid that federal withholdings throughout the year instead of if you pay estimated tax payments on the quarterly basis, and say for instance you miss the first 3 and want to catch up at the end of the year, you will be penalized because you didn't make the estimated payments on a timely basis. But if you ran that through your W-2 wages and paid it through payroll, it's treated as if it were paid throughout the year, and so there wouldn't be any penalties for that. Yes, and so I hit the pros and cons. Perfect. What paperwork or proof should we track throughout the year? Just keep your receipts for any business deductions that you have. Now, you don't need to provide those, but you want to keep those just in case of an IRS audit. Do you recommend a software or a process? it can be as simple as just scanning those receipts and just keeping a file on your computer. Partnership reimbursement, SBA loans versus grants, how to report this. So SBA loans are not considered income. So you'll report that on your in your books as a loan. Grants, if it's from the state or local agency, unfortunately, that is considered taxable income and would have to be reported through your business. Okay. We obtained the EIN in November 2020. We are still in the process of creating our online store. Do we have to pay any taxes this year? There's probably, if there's no income, then there won't be any taxes that you'll have to pay on that money. But if there are expenses that go along with that, you'll want to report it so that you can offset any other income that you might have. Do you know how long it takes for a seller's permit license to be mailed? That just depends on your individual state agency and what their time frame is. So I'm not exactly sure. If all the profits get reinvested in the business, is there any tax to pay? For example, any profits are used to pay down the real estate mortgage. Yes, this comes back to that same scenario that I was talking about earlier, where the S Corp didn't pay out all of the distributions for the business. It made, so if you remember the scenario, the business brought in $100,000, had $30,000 worth of expenses. So the business made $70,000, but only distributed to the owners $50,000. The owners are still going to be subject to the to taxes on the full $70,000. It's the same with the profits reinvested in your business. Even though you didn't take that money out, but you put it back in the business, as long as you didn't pay for other expenses, that money is going to be taxable to you. Okay. I paid estimated tax in 2020 to the government, but my income arrived late when 2021 started. Do I need to explain anything to the government? No. So you're ahead of the game in the sense that you've estimated taxes and pay taxes in a year that you didn't have as much income. And so that should just increase your refund that you're getting, or you can just apply that refund to the 2021 when the income actually comes. Okay, everyone, thanks for coming today and spending time with me. That's going to wrap up our Q&A. I hope that I was able to help you understand the world of business taxes a little bit better. Just a reminder that each month we do 3 webinars, 2 Q&A, and the other one is like the one that we did today about a specific topic. If you're a Mazuma client, you can register for the upcoming webinars through your Mazuma dashboard. Our next webinar for Mazuma clients will be a Q&A on January 20th at 2:30 Mountain Standard Time. If you need more information, you can head to our website at www.mazumausa.com. Mazuma clients can go to their dashboards and get in touch with the Tax Pro if they have more questions. This is Jeff signing off.